Welcome back to Investing Talk Podcast. Today we're digging into a really interesting but definitely volatile name in biotech, Briacell Therapeutics. We've gotten a lot of questions about this one, and the core question is pretty straightforward. Is now a good time to buy Briacell? Before we unpack the science and the tricky financial situation, please do take a second to subscribe, like this analysis, and comment. And hey, if there's another company you want us to tackle, definitely let us know in the comments below. Okay, Briacell Therapeutics. Let's zoom in.
So this is a clinical stage company, right? Focused on oncology.
That's right. Clinical stage meaning, no approved products yet. They're working on immunotherapy, specifically for advanced breast cancer.
And it's a crowded field. So for listeners trying to get up to speed, what makes their approach different? What's unique here?
Yeah, that's the key question. They're definitely up against giants like Merck, Bristol Myers Squibb, big players.
Right.
But Briacell's angle is different. Their lead product, it's called BRIA-IMT. The big idea is that it's what they call an allogeneic cell therapy.
Yeah, Nanternas, think off the shelf, ready to go. It's not patient-specific. That's the contrast with autologous therapies, where you actually take the patient's own cells, engineer them, and put them back in.
Ah, okay. So autologous is like a completely custom job, takes time, costs a lot.
Exactly. Very complex, slow, and hugely expensive. Briacell's pitch is that their off-the-shelf BRIA-IMT could be faster, maybe more cost-effective, easier to scale up.
More accessible, potentially?
Potentially. They believe it primes the immune system differently, helps it attack the cancer better. It's a really novel concept.
And this is the big bite.
It's still in clinical trials, no guarantees yet. Commercially unproven.
Okay, that sets up the core tension. You've got this exciting science, this potential game changer, but zero revenue coming in and the costs are piling up.
Yeah.
So let's talk about the good news first, the clinical results that are actually driving all this interest.
Right, because without positive data, there's really nothing here for investors. And the data has been impressive. Particularly, you have to remember, this is for patients with really advanced metastatic breast cancer, often patients who've already tried multiple other treatments.
A very tough group to treat. So what did that phase 2 data from July 2025 show? The survival numbers.
Yeah, those were the numbers that really caught people's attention. They reported that 52% of these heavily pretreated patients lived past the 1-year mark.
52%. 1-year survival.
Exactly. And in this particular setting, survival is often measured in just months. So hitting over half surviving a year, that's meaningful. It suggests a real durable benefit.
And there were those standout cases too, right? Longer-term survivors.
Absolutely. That durability is critical. It wasn't just a short-term effect. They highlighted 2 cases specifically where survival went out to, I think, 38.3 months and 30.3 months.
Wow.
Yeah. And importantly, the source material also mentioned that nobody stopped treatment because it was too toxic. So it seems pretty well tolerated too.
Right. Okay, so good efficacy, good tolerability. That's a promising combination.
It really is. That's what you want to see.
And they didn't stop there. They also tested it in combination with another drug.
Right. Standard practice in oncology now. Combine therapies to get a bigger effect. They paired BRIA-IMT with Incyte's drug, retifanlimab, that's an anti-PD-1 checkpoint inhibitor.
And how did that go? That data came out in August 2025.
Also very strong results. They reported a 70% disease control rate. So 7 out of 10 patients saw their disease either shrink or stabilize. And they saw actual tumor shrinkage too.
70%. So the idea is that BRIA-IMT sort of wakes up the immune system around the tumor.
Yeah, potentially creates a more inflammatory environment.
Allowing the checkpoint inhibitor, the retifanlimab, to work much better than it would on its own.
That seems to be the hypothesis, a synergistic effect.
And the FDA noticed this.
They did. That combination therapy got an FDA Fast Track designation.
Okay, Fast Track. That sounds important. But what does it actually mean for the company? Why is that a big deal?
It's a very big deal. Fast Track isn't just a nice label. It means that the FDA sees the potential to fill an unmet need. It allows Briacell to interact more frequently with the FDA, get advice, and potentially speeds up the whole review process down the line. It helps clear the path towards those crucial late-stage trials and hopefully approval.
So fantastic clinical signals, regulatory support starting to build. That's the high reward part of the equation.
Definitely.
Now let's pivot to the high risk, the financials.
Yeah.
Because all this great science costs money, and that clock is ticking loudly.
Yeah, this is where reality bites for a lot of clinical stage biotechs. As you said, Briacell reported no commercial revenue for their last fiscal year ending July 31st, 2024. Expected, but crucial.
So how much are they spending? What's the burn rate look like?
Well, their net loss for that fiscal year was $23.7 million.
Okay.
And a big chunk of that, about $17.6 million, was specifically for research and development. Running these complex trials isn't cheap.
Almost $24 million lost just running the business last year. How much cash do they actually have left ending July 2024?
Okay, so the balance sheet showed $21.5 million in cash and equivalents as of July 31st, 2024.
21.5 million.
Right. Now, compare that to how much cash they actually used in operations over that year, which was $19.1 million.
Oh, the math isn't great there.
It's not. You do the simple division. Management themselves stated that they estimate their current cash will only fund operations through July 2025.
July 2025.
Yeah.
So less than a year from when that statement was effectively made. That's a very short runway.
It is. It means raising more money isn't a question of if, but when and how. It's pretty much a certainty.
Right. Which brings us to financing risk. They have to raise capital before July 2025 runs out.
Absolutely. And the most likely way they'll do that is by selling more stock, issuing new equity.
Which means dilution. Let's spell that out quickly. Why is issuing new stock potentially bad for current shareholders, even if the company is doing well scientifically?
Right, dilution. It's just math, really. Say the company has 10 million shares out there, and you own 100,000, so you own 1%. If they need cash and sell another, say, 5 million new shares to new investors, now there are 15 million shares total. Your 100,000 shares are suddenly only 0.67% of the company.
So your slice of the pie got smaller.
Exactly. Your ownership stake is diluted. This happens even if the science is great. You're basically paying for future success by giving up some of your ownership percentage now.
So the bet for an investor here isn't just, will the drug work? It's also, can they get good news or a partnership before they're forced to dilute everyone at potentially a low stock price?
That's the tightrope they're walking. That's the essence of the speculative bet here. One small positive on the financial side, though. The company reported no long-term debt.
Okay, so they don't have debt payments hanging over them.
Right. It simplifies things a bit. Their main constraint is just that cash runway, that ticking clock to July 2025.
All right, let's talk about what could change the game before that clock runs out. What are the key things investors should be watching for in the next, say, 3 months or so? The catalysts.
Okay, the next quarter is definitely packed. First up is October 15th, 2025. That's their Q3 earnings release.
And investors will be watching.
Cash burn. They'll want to see if that $19 million annual burn rate is holding steady, increasing, or decreasing. And they'll want confirmation or an update on that July 2025 cash runway estimate. Any change there is major news.
Okay, Q3 earnings for cash updates. What else?
Then there's a market mechanics thing on November 6th, 2025. Some anticipated ETF rebalancing. That could just mean more trading volume, maybe some short-term volatility, but less fundamental.
Right. But the big one seems to be in December.
Yeah. The main event looks like December 18th, 2025. They've flagged a Q4 guidance and clinical update, probably a virtual event.
And what are people hoping to hear then?
This is where they should give updates on future trial plans, maybe details on a pivotal Phase 3 study design. They might release more interim data from ongoing studies, and crucially, any updates on their talks with the FDA about that fast-track designation and the path forward.
So that December update is really key for the clinical story.
Absolutely. That's a major potential catalyst or risk, depending on what they announce.
Given the strong data and the fast-track status, what's the general buzz or speculation around Briacell right now? What's the blue sky scenario people are dreaming about?
Well, the biggest hope, and it's a realistic one if the data holds up, is a big pharma collaboration.
A partnership.
Yeah, either licensing Bria-IMT out or a co-development deal. If a large company like Merck or Pfizer steps in with their resources and, importantly, their cash.
That solves the funding problem overnight. Non-dilutive cash.
Exactly. That would be huge. It validates the science and removes the immediate financing overhang. That's the dream scenario for current investors. There's also some chatter about maybe pushing for even faster regulatory pathways, like trying to get breakthrough therapy designation on top of fast track. That would signal even higher confidence from the FDA.
Okay, let's touch quickly on the stock chart before we synthesize all this. How has the stock actually been behaving? What do the technicals look like?
Lately, it's been pretty much stuck in a range, consolidating. trading roughly between, say, $6.80 on the low end and $8.25 on the high end.
Okay, a defined range. Where's the support and resistance?
Yeah, support seems to be holding around that $6.75 to $7 area. Resistance, the ceiling they need to break through, is up around $8.20 to $8.40.
And the trend?
Overall, it's kind of sideways to maybe slightly bullish consolidation. Like the market is waiting, holding its breath for that next piece of news, probably the December update.
But it's volatile, right? This isn't a smooth ride.
Oh, absolutely not. This is a classic volatile biotech stock. You have to expect big swings, like easily 10% or more in a single day, up or down, whenever significant clinical news or financing news drops. It's not for the faint of heart.
And that volatility ties back into the risk we mentioned earlier, the concentration.
Precisely. It really is the definition of a binary event stock. Pretty much everything rides on this one program, Bria IMT.
They don't have a diversified pipeline to fall back on.
Not really.
Right.
So if Bria IMT hits a major snag in late-stage trials, unforeseen safety issues, efficacy doesn't hold up, the impact on the stock price would likely be severe. Crushing.
But the flip side?
The flip side is a big win like the pharma partnership or stellar phase 3 data could easily send the stock soaring. Double or more overnight isn't out of the question in biotech wins like that.
Okay, so let's pull it all together. We have genuinely exciting, potentially life-changing clinical data in a tough-to-treat cancer. We have regulatory momentum with Fast Track, but we have that massive concentration risk on one drug and this looming financial cliff, that July 2025 deadline where the cash runs out. Based on the source material, what's the overall take?
The sources clearly frame Briacell Therapeutics as a high-risk, high-reward, speculative play. It's pure clinical stage biotech. The specific rating mentioned in the material was actually quite cautious, a 3 out of 10 for general investment suitability that really highlights the extreme risk and volatility involved.
A 3 out of 10. So what does that mean practically for you, the listener, thinking about buying?
Well, the recommendation coming out of the analysis is pretty clear. This is not something suggested for a long-term buy-and-hold investment portfolio right now, not until they actually get a product closer to market or solve that funding issue.
So who is it suitable for?
It's really only appropriate for investors who are very comfortable with high risk, who understand the biotech space well, and are specifically looking for short-term speculative trades, betting on those specific events like the December data release or potential partnership news.
Okay, so let's summarize. Briacell. Incredible promise shown in the clinic. The 52% one-year survival, the 70% disease-controlling combo, the fast-track status, all very positive.
Right.
But balanced against that is the stark financial reality, the concentration on just Bria IMT and the near certainty of needing more cash soon, which likely means dilution for shareholders.
That's the trade-off in a nutshell.
Which leaves us with a really interesting question for you to think about. When you're looking at a company like this, amazing science, but short on cash, what's the bigger risk you're actually betting against? Is it the risk that the science ultimately fails? Or is it the risk that the science succeeds, but you get significantly diluted along the way as they raise the money needed to fund that success? Something to really mull over as you watch for those Q4 updates and keep an eye on that cash balance. Thanks for tuning in to this analysis of Briacell Therapeutics. We hope breaking this down helps you make more informed investment decisions.